Hey everyone, welcome to a Optimum FX weekly analysis. It's currently the 19th of September 2021. Where I am in the world, it's about 12 hours until market open. So what I'll be doing, I'll be analyzing our major currency pairs. I'll be looking at the US dollar itself, gold and NASDAQ. But firstly, I'll be looking at what macroeconomic data is going to be released throughout our major economies, understanding how that can impact the market, and I'll be mapping out potential trade ideas with the technical and fundamental confirms. Okay, so first with the US dollar, just to run it through very briefly. So we do have building permits, housing starts to start the week, and on Wednesday we do have existing home sales, weekly mortgage applications, but the main agenda for Wednesday is the FOMC meeting, so the interest rate decision with the US dollar. So if we have been following what the Fed has been saying over the past few months, September has been the month where they're potentially targeting tapering to start tapering their bond buying. Okay, start tapering their $120 billion a month of purchasing government securities. Okay, $80 billion in treasuries, $40 billion in mortgage-backed securities. So we do have to keep in mind that the Federal Reserve, they're looking for strong employment numbers, steady inflation, and overall, that what ties in with that is good consumer confidence, good GDP numbers. Okay, so but the main thing that they're always the main focus, or the main objective that they've been looking for is achieving pre-pandemic employment levels. Are we at those levels as of right now? No. Okay, but we are getting very, very close. Okay, so as we know, Federal Reserve members have been talking about, September is a month where we could potentially start to taper. Okay, so we do have to keep in mind, so if they do start to talk about tapering, we will see the US dollar rally like it did last week, and remember that, and we will see our equities fall. Okay, we will see our risk currencies fall, we will see commodities fall, we'll see gold melt, we'll see gold continue to fall. Okay, obviously there's going to be pullbacks due to the nature of the market, and we'll see oil fall, like I said, major commodities, and there's a good chance that NASDAQ will fall. Okay, so why am I saying that NASDAQ is going to fall and so forth? Alright, so I'll quickly explain to you in the most simplified way. So pretty much when they start tapering, that means the economy is healthy. They can start to emphasize more stricter monetary policy conditions. Okay, when they're decreasing liquidity out of the market, decreasing the supply of dollars, that increases the dollars because the supply limits and the demand is a lot higher. Foreign investors will put their money into the US dollars because the economy is overall a lot more healthier than it was in the past month and in the past year or so. Okay, and then once they start to taper, they will more than likely in the coming years, I wouldn't be surprised if in the coming year, okay, that they will start to hike the rates. So what does that mean when they start to hike the rates? Okay, the dollar is going to be very valuable. Businesses will their revenues are going to decrease because their repayments on their business or corporate loans that they get from merchant banks is going to decrease their revenue. Okay, and then we'll just see, you're not going to see the stock market crash, you're just going to see a pullback. All right, you're just going to see a correction. Okay, anyways, so keep that in mind. So that is the main agenda for the Fed. Okay, I believe they will talk about tapering, but I just don't think that they're there yet. Okay, I just don't think that they're like that. They haven't fully met their policy objectives, but we do have to keep in mind that the Bank of England and the ECB have already talked about meeting. They have already met the monetary policy objectives. They're just waiting for the Feds to pull the trigger. They're relying on the Feds. Okay, they want the Feds to go first. And if you have a look, we have a look at the Bank of Russia, the Bank of Mexico. Who else? You got the Bank of Philippines, the Bank of South Korea, so forth. All those minor economies or emerging markets, should I say, they've already hiked their interest rates. Okay, that they already have. Okay, so obviously, if they're hiking the interest rates, the US isn't going to hike their interest rates. But if those emerging markets have, more than likely the Fed and the other G10 economies will follow. So just keep that in mind. Anyways, so that's enough of that. So on Thursday, we do have initial jobless claims, Chicago Fair National Activity Index, preliminary PMI numbers, as usual, weekly natural gas storage, and new home sales. We've got to keep in mind that new home sales ties in with housing starts and mortgage applications. Okay. So on Wednesday, we do have in Europe consumer confidence. On Thursday, preliminary PMI numbers. So not much volatility that we're going to see throughout the week, just probably on Thursday. On UK, we do have on Thursday the Bank of England interest rate decision. Like I was just saying before, Bank of England have already reiterated that they have met their monetary policy objectives to start tapering, so decreasing liquidity, ease on their QE. All right, but they're waiting on the Fed. Okay, so just got to keep that in mind. We've got consumer confidence as well. So they're not gonna, like, the interest rate isn't gonna change. It's just what they talk about. It's just the minutes, like what they're going to be speaking about. Okay, remember, this is a day after the Fed. Japan, their interest rate decision is going to be a day before, on Tuesday. So, we've got the interest rate decision on Tuesday. Subsequently to that, a day after, we do have Bank of Japan press conference just to reiterate and distribute what was pretty much discussed from that meeting. Okay, and on Thursday we do have CPI numbers coming out. Canada, we do have retail sales coming out on Thursday, so we're going to see a lot of volatility with the Canadian dollar. And with Australia, we do have the RBA meeting minutes, just reiterating what was talked about in their monetary policy meeting. Unless there's any amendments or revisions, you are going to see some volatility with the ASX, which is Australian Stock Index, and the Australian dollar. Okay. We do have the Westpac Leading Index, which is just an economic sentiment. What has happened on a economic / consumer wise for the Australian economy, and what they're forecasting in the coming months, coming quarters, and in the coming year. So, and we do have an RBA member Bullock speaking subsequently to that. And on Wednesday, we do have preliminary PMI numbers. All right, so let's quickly go to the charts. Okay, so as we can see, I'll quickly do this across our major currency pairs. So, it has been on a strong downtrend with the Australian dollar, with Dixie gaining a lot of strength. Euro dollar is actually retreating from these highs here, fails to break above here. We did push further to the downside. GU is it's pretty much the same thing, right? It's just the same thing across the board. Dollar's just gaining a lot more strength. Sorry. Yeah, so dollar's just gaining a lot more strength with the optimism from the Federal Reserve, with good employment numbers, good inflation numbers, and that has led to dollar gaining immense strength. And with Federal Reserve members talking about, they are getting closer to tapering with the current economic conditions. Okay, so all right, let's firstly look at the Australian dollar. So with the Australian dollar, what I'm really liking is with the current prices at the moment. So I'm firstly going to identify this. All right, going to identify. Oh, let me undo that one. Yeah, all right. So I'm identifying this little higher time frame order block. Okay, so really identifying this little higher time frame order block. We actually did break below, accumulate here, push down. Okay. And this was a bit of a false breakout. I mean, it's really easy to see in hindsight, but yeah, you understand what I'm saying. You know, this is a bit of a false breakout with failures to break above, and we did trade back into this little range, and now we've actually retested this little higher time frame order block. Okay, so what I'm really liking, I don't see us retesting 73 again, 73,200 again. What I'm really seeing is if we can potentially retest here, these previous lows here, and continue back down, okay? Continue back down, retest this little liquidity level, and target these previous lows here, right? Target these lows again, come down, retest, come down, and target these lows, okay? So that's ideally what I'm looking for with the Australian dollar. Because like I was saying, I'm very hawkish on the Federal Reserve, very hawkish on the US dollar. Okay, so just got to keep that in mind. However, if we actually get some counterbody closures above here, I'm really liking, you know, some high risk buys to potentially play back in this range. You're safe if you do want to take some buys. You'd probably want to wait till we retest. All right. Till we retest in this little range here. Okay, so once we retest in this little range, retest back up into this little previous order block low, I'm really liking if we continue back up around the 74 region, and safer buys once you break and retest here. Okay, continue back up, but more than likely with the current market sentiment, I do see the Australian dollar continuing to push further down and essentially grab liquidity and seeing price being pushed to this more favorable demand zone. Okay, so I'm just going to keep those things in mind. So moving on to the euro. Euro is very similar. You know, first thing at the bat, you know, really identifying like this bearish to structure. You know, failures to break above this previous high, these previous highs here. Really liking how we actually did get a nice retest at these in intraday lows throughout July. So I'm really liking how we did do a bit of a retest, but we did push further down. So what I'm really liking, I'd really like to get like a retest at 117,500 to continue back down, and ideally I'd be targeting these lows initially, these previous lows here, these previous closures here, targeting these lows, and once we retest here, just be targeting these lows here. Okay, so that's ideally what I'd be targeting with the euro dollar. However, like to me, this is just a strong, this is just a strong liquidity level that I'm eyeing at the moment. Potentially we could break out of this bearish structure, but like honestly, we can just see a strong, you know, bearish structure, right? So, you know, come down, come up, come down, come up, come down, come up. You get the gist, right? So, however, if we get some nice counterbody closures above here, some very high risk buys, or potentially we could get some strong rejections here, but like I was saying, I'm more inclined on getting a retest at about 117,500, continue back down. And once you get some counterbody closures below here, I'm really looking to take the sells further down. So, all right, next thing with sterling dollar. Sterling dollar is very similar. Yeah, my bias isn't really going to change, but what I'm really looking at, okay, so what I'm really looking at the moment, I'm essentially just eyeing these price levels. Okay, so roughly about 137,382, which is essentially where we're at the moment. Okay, so we must understand that once we did start to pull back from these lows here at around 136, we did push back up, generate a bit of a higher time frame support. We did start to push back up, and we essentially failed to generate, you know, some strong high time frame counterbody closures above 138 to 800. So essentially what I'm eyeing for, looking for at the moment, is once we actually get a retest here, get a nice counterbody to close below 137,400, I'm really liking to continue sells down to roughly 137. Okay, so that's about a 40 pip range, and then ideally we can play down the key levels. Okay, So I can play down to this level here. Oh, let me fix this up. Yeah, so could play down to this key levels here and targeting these previous lows. Okay, so that's probably what I'd be looking for at the moment, because I'm not too inclined on taking some buys. If you were to take some buys, like these would be some very high risk buys, but with the current market sentiment, and we do have to keep in mind that we are going to see some volatility with the Fed interest rate decision and the Bank of England interest rate decision, but with the current market sentiment, I'm really liking sells. I'm really liking shorts. Okay, just following the current market sentiment. Obviously, your high risk buys are at this point level here at around 137,400. I just know once you close below here, get a nice root test, we can continue back down. Okay, so want to keep those things in mind. And it really helps because we failed to generate, or we see price get pushed to this high time frame supply zone at these highs here, which is about 139,800. Okay, so really inclined on these sells. Could get a nice retest, continue back down. All right, so that's what I'm eyeing. Looking for at the moment, but we could generate a bit of a high time frame candle body support at 137,400. Continue back up, eyeing these liquidity levels. So yeah, potentially play back, continue back up. So that's what I'm looking for on GU. All right, so on GJ, very similar. What I'm really liking on GJ, I can identify, a bit of a higher time frame order block in this sort of range here, about 151,500, and lows at about 151,200. Okay, so this is roughly a 300 pip range. We did actually break and retest above here, but it's just the way the last two 4-hour candles close, and the most recent 4-hour body, so the last candle close below below this little higher time frame order block, and I'm really liking how we did. Like initially, if I didn't see this happen right here, I was really liking these continuation buys. Okay, targeting this little price level, and then potentially this price level. Yeah, and then targeting these highs. Like, unfortunately, that didn't happen, but it is what it is. But I'm just adapting to the current market sentiment. So that being said, and I'm adapting to the current market structure. So once we actually did break below 151,200, like these sells are looking, like to me, these sells are looking very valid. Okay, really liking if we can potentially push further down and try to catch and try to see sells being pushed down to 150,600, and then I'd just be eyeing these liquidity levels here. Okay, behind these liquidity levels, come down and push further down to these lows here. Okay, so ideally that's what I'd be looking for GJ, but potentially if we stay below here, if we see some high time frame candle body closures below here, so I'm talking about the 30-minute, 1 hour, 4 hour, really liking some continuation sells on GJ. However, we could snap back in this range, generate a bit of liquidity, mess around this range, and then we could start to break and retest below or potentially above, depending on the market sentiment. Okay, because we do have to keep in mind that the Bank of England interest rate decision will be released as well, and the Bank of Japan. Okay, so it's going to keep those things in mind, and we do have to keep in mind that any policymakers, any central bank members speaking, that could bring some short-term volatility to the market. All right, next thing is USDCAD. All right, so USDCAD. So with USDCAD, we actually did break above here, right? So we actually did break above this little high time frame order block. We did continue back up. What I'm really liking at the moment is if we generate a bit of potentially just a bit of a high time frame range here, playing this little range here, start to get a retest here, continue back up for some medium risk buys, and then we could go in for another retest at around 127,700, and then continue back up. I'd ideally be targeting this level and then this level. Okay, That's what I'd be targeting for, and you cannot deny this high time frame bullish structure. Okay, so just gonna keep those things in mind, and eyeing this, yeah. And you know, we can definitely see, you know, this previous high time frame order block, and as we can see, you know, just with simple market structure, we failed to close below, you know, this little previous range here. Okay, and as we can see here, you know, we do start to retest these previous highs here, start to retest, and it's easy to like say in hindsight, but you know, we recognize this now. Okay, and ideally what I'm looking for this week is if we retest 127, all right, 127 flat, you know, just see Dixie do a bit of a pullback for the actual move, you know, at FOMC, and continue back up, because as we know with USDCAD, it loves to range, like prior to interest rate, prior to inflation, prior to employment numbers. It loves to range, and the easiest trade for me is just trading that breakout. Like, to me, it's just the simplest trade. You'll see this happen on USD. Like, USDCAD loves to range, but when the breakout happens, like, it moves. Like, it will move, you know, 30, 60 or so pips. I wouldn't be surprised if it moves 100 pips on FOMC. Wouldn't be surprised. But keeping those things in mind, that's trade ideas for USDCAD. Next thing is dollar, right? So with dollar here, you know, we actually did break above the intraday highs, and here's the thing, we did a nice little retest. Okay, nice little retest here. Continue up. We did get a nice retest here at roughly about 92,950. I was expecting some. Yeah, I was expecting some rejections, you know, roughly about at 93,100. Didn't get anything like that. Yeah, unfortunately, we didn't get anything like that. Even at these, you know, previous liquidity levels. But one thing you need to eye for is 93,500. Okay, this is the yearly high. Okay, and it's just odd that this is gonna happen. Like, we're getting closer to yearly high prior to FOMC, right? Prior to FOMC, when they anticipated months ago when they would start to talk about tapering, or when they would actually start implementing tapering. So we do have to keep those things in mind. I'm still very bullish on the dollar. Potentially, I'd like to see if we can come back down, retest here, and then continue back up. But I just don't think we're just going to pull back and mirror this flush move here. Okay. But I do like, if FOMC is very positive, very hawkish, the dollar is going to do a bit of a liquidity grab and then continue back up for the actual move. Potentially even retest 93,100. That'll be a good price level to do a nice little retest. Okay, at these previous highs here, previous lows here. Okay, so that's what I'm eyeing for, or looking out for on dollar. Now gold. So gold has just been on a bit of a sell-off, obviously with US dollar strength, and this in mind has been also due to the inflation numbers, because we do have to keep in mind that inflation was actually low. Okay, it was actually low, and when inflation is high, traders or investors, institutions, they put their money into gold to hedge against high inflation. Okay, to hedge against debasement of the US dollar. So once we actually did break below, you know, these intraday lows, we just melted, you know, straight to the downside. Didn't even get some rejections at these intraday lows. Now we're just playing at this range here at 1750. Once you break and retest below here, I'll be targeting these previous order block highs, then these previous order block lows. Okay, so yeah, be targeting here, targeting these lows here. Okay, but I wouldn't be surprised if we do generate a bit of a higher time frame order block in this range here. Okay, like, I mean, this is a big range, you know, this is like 1750, 17, is that 17? That's 150 pip range. Okay, so to me, we can potentially play in this sort of range here, and we do have to keep in mind that it did generate a bit of a support at a previous order block. Okay, previous accumulation area, previous range, whatever you want to call it. So once we actually did, you know, generate a bit of accumulation in the zone here, so all I'm waiting for I'm ideally just waiting for the Feds, okay? Like the Feds will dictate where gold will go, okay? So what I'm trying to say is, so if the Feds are very hawkish, they start talking about tapering soon, 100% gold is going to continue down, and it will start to push further down, okay? It's easy to say, it's easy to say right now, but what are we looking at for price, okay? I am looking 10 times out of 10, honestly. Once you get a counterbody closure below here, like closes, like I'm looking at a 1 hour, 4 hour candle, it closes below there, you are gonna want to take sells. You are gonna want to take sells and target these previous highs here, and potentially if you're trying to swing gold, swing these gold shorts 100%. Take him down to the previous order block low. Now, if we see continued US dollar strength, continued optimism from the Federal Reserve, I won't be surprised if we come down to these yearly lows here, and that'll be a make or break point. Alright, so I doubt we're even going to come close to 1775. That is a possibility, but you need to get some counterbody closures above here, okay? Potentially play back in this little range here, continue up, retest, continue back up, okay, and play back in this little range. But just with that current move that has happened, the only way I could see that happening is once you break and retest above here and dovish sentiment from the Federal Reserve. Alright, next one is NAS, okay. I could actually, I'm firstly gonna look at NAS, okay. So NAS, NAS, all-time highs, this level here, all-time highs around 15,700, okay. Now with the US dollar gaining strength, NASDAQ, any stock market indexes will start to depreciate. They will start to fall. There will be a lot of profit taken from buyers, okay, because the US dollar, and the equity markets, they move the opposite, okay. The US dollar is treated as a safe haven asset. I could go on and talk about how the US dollar gained value during the pandemic, how the yen gained value, how sterling, Aussie, euro fell down, how Dow Jones went from 30k to 18k, and explain the fundamental catalyst behind that. But I don't really want to explain it because I'll be here for a while. That can totally be done in another video, okay. Anyway, so what I'm trying to focus on here is NAS, okay. So once we actually did break and retest below 15,600, that's showing you a lot of sell side momentum, okay. So now we can identify that this is just our previous order block, alright, and now you ideally just be looking at these levels here, and what do you know, from this little order block that was formed here, this little order block that was formed here, look, we get a solid retest, okay, and once you break and retest below here, this thing is more than likely going to target these lows here. So honestly, that's only a 100-point move. We can potentially mirror this flash move to the downside, but right now I'm liking a retest at 15,400 for some medium risk shorts with the current sentiment from the Federal Reserve, from our major central banks, continue back down, targeting 300, then targeting 200, okay. So that's roughly a 200-point range, which would be a swing trade. That thing's not going to happen overnight. Actually, let me take back that comment. That thing can happen overnight from the Federal Reserve, okay. So like I said, once you retest below here, continue back down, okay. Ideally, or we can continue back up here first, like I just said, continue down, get a nice counterbody closure below here, target 15,200, and then you'd be eyeing out, where was the previous order block in this little range here, okay. So ideally, I'm going to do that one. Yeah, so ideally we can target the these previous lows here. Like it's a bit messy, these highs here, these highs here, these previous lows here. So we could target 15 flat. All right, so that's what I'm looking for across our across the NASDAQ. because as we can see, you know, US30 has just been on a bit of a downfall. Let me put these back on. Yeah, so US30 has been on a bit of a downfall, trading from these highs here. Like I said, you know, once you read, it's really easy to say in hindsight, but what I'm saying now here, all right, what I'm really saying now is when we break and retest and stay below 630, I'm really liking targeting. Like right now, I'm really liking targeting 200, just with the current sentiment. Okay, but you're gonna get your biggest move from FOMC, without a doubt. But we must also understand that once we actually break, you know, these liquidity levels, like we will push further to the downside. Okay, I could go on and tell you, you know, a few other reasons why the Dow Jones have been starting to sell off. Like it's just been the sentiment from the Federal Reserve. Okay, they're getting very close to tapering. I know another thing as well. The China credit impulse has decreased, so less businesses are borrowing money from China. Okay, and here's the thing, you know, so like it's getting, you know, like it's getting a bit messy. You know, there's some fear happening at the moment. We've seen a lot of scrutiny from the Chinese government, especially with the companies with like that operate through that business, and you know, other Chinese companies that are listed on American stock indexes. Like they've been under some massive scrutiny. So we just, you know, with the regulations that they have put in place, like I can go across the board. You know, I'm looking at Aussie, you know, retreating from these highs here. Like all equity markets, they all follow. China is probably one thing you need to look out for. You know, after these 20k highs, we're now traveling at around like 15k roughly. Once you break and retest below here, it's a very good chance that we're going to mirror this flush move that was originally to the upside and target 13,500 roughly. Okay, so just got to keep those things in mind. Like I can look at German 30. German 30 is still at its highs. Euro, I think Euro's actually still roughly at their highs. Sterling's taken a beating. I know Japan has been Japan's at its all-time highs only because the Bank of Japan admitted to continuing and buying more Japanese ETFs. Okay, so that's the main reason why. You know, if the Bank of Japan are buying assets, they are going to increase. They're not going to decrease. You know, that is a signal to continue buying Japanese ETFs. So anyways, that's a whole different discussion, but I hope you enjoyed the analysis. If you did, you know, feel free to like, share and subscribe. I hope you all have a great trading week.